Welcome to the Massimo Show.
Chris, you've become, I guess, a well-known advocate by delivering testimonial to the U.S. Senate Committee on Small Business and Entrepreneurship, as well as the U.S. House of Representatives on the Small Business Committee. I understand the accolades of your firm. I know you're on the Inc. top 5,000 fastest growing firms, the 9th fastest growing firm in Orlando. You're the CEO of the Year in Orlando Business Journal just this past April. Chris, wow. Thanks so much for joining us on the Massimo Show.
Thanks for having me, Rod. Okay,
Chris, I'm going to treat you like I treat all our guests. You're an entrepreneur by trade. You're doing some amazing things. But before you got where you are right now, take us back to high school, Chris. What was the passion of high school Chris? What was he doing?
Probably was chasing girls, to be honest with you. Playing a lot of sports. I was real involved. Yeah, there was the girl chasing too. But no, I think it was a time when I had a lot of plates in the air that I was spinning, and it really hasn't stopped ever since. So it was good training for me to do a lot.
So when did you get the business bug versus the girl chasing and sports bug?
Actually, when I was 13, my parents finally divorced. They'd been separated for a number of years prior to that. And I was helping my mother actually learn to be a real estate agent. I was actually helping her take the real estate license test. And I thought that was kind of interesting, and it kind of stuck with me. And I'd always been a little bit entrepreneurial anyway, but that particular aspect of, properties, real estate, finance related to real estate, it kind of stayed with me through the years. And ultimately, I ended up going to grad school and got a master's degree at the University of Pennsylvania, Wharton, and eventually jumped into the field. And, as we were just talking before we came on camera, way back in 2002, I was actually even the CFO at the second largest commercial real estate brokerage firm here in Orlando at that time for a couple of years before I got into the lending business.
But you've always been on the finance end or financial review end. Yeah. And somehow this though has developed more of you saw a need in the marketplace. So help me understand this evolution to where you are today, where you start seeing this need both from the commercial real estate lending side, but more so from a small business lending side. How does this all evolve to you become the expert, really? And we'll talk about some of the programs in a minute, but the expert in small business lending. How'd that evolve?
So out of grad school, this would have been in the mid-90s, I moved to DC. I actually thought I was going to do some work in government on Capitol Hill. I think they still call it the last plantation for a reason. Nobody really gets paid very well up there. And so I decided instead of what they do is effectively they sell and persuade ideas as opposed to products or services. So I thought that was kind of a revelation in my mind. And I thought I could probably do that in the private sector. So I went to the private sector. I hooked up with a high-tech startup in Northern Virginia that was really taking off. And this was before sort of that was fashionable to do. And I quickly became their top salesperson. And then I sort of self-taught myself marketing, never taken a marketing class in my life. And I think most people in the small business lending community would say we're known as the best marketers by far. And it's completely self-taught, nothing from a college course. And after doing that for a few years, recruiters came calling and wanted to pull me into the finance aspect of sales and marketing. And it was a natural fit. I joined GE Capital. After I was with GE, they actually moved my wife and I here to Orlando 22 years ago, this month, actually. And so we did that. Then I got recruited to join Heller Financial, which doesn't exist anymore, who was also a very large national non-bank lender, just like GE was. And then GE bought Heller. And my joke at the time was always, all you had to do was get rid of the cap on income for me, because you get stock options above a certain income cap, which I thought was silly, kind of a disincentive. I said, you didn't have to pay billions of dollars to get me back. You could have just fixed that one tweak and I would have been happy. So then I got a little disillusioned because there was some disruption. This would have been right around the dot-com implosion, a lot of disruption just all throughout the economy, but even in financing. And I became a management consultant for a couple of years. Worked for Marsh & McLennan, trying to do some insurance capital credit enhancements. That came to kind of a screeching halt shortly after 9/11, when I was supposed to be in one of the towers with a big meeting. And my daughter, fortunately, had been born 11 days before that. So my wife, we didn't know when she was going to be delivered. So I wasn't traveling. I had to miss the meeting. I was supposed to call in on the conference call. And obviously, we know how that turned out. But that was sort of a turning point in my life in that I decided I didn't want to work for big corporations anymore. I thought I wanted to go out and be an entrepreneur. I was always the fastest moving guy, hustling guy. I was always had a little bit of a sales bent about me anyway. And you can only do that so much at a large corporation before you start running into roadblocks. So, I had the idea that one of the SBA products that I had learned how to provide at GE Capital and at Heller Financial, it's called SBA 504, was not very well accepted. We didn't have the kind of per capita numbers of that loan. It hadn't penetrated this market in the Metro Orlando area as well as I thought it should have. And my comparison set was based on the 2000 census numbers. Of all things, the state of Utah had roughly at that time the same number of small businesses and population size as we do here in Metro Orlando. And yet they had about 7 times the market penetration, these types of 504 loans per capita.
Let me stop you there because some folks may not understand what a 504 loan really is.
Okay, we'll cover it.
Okay. So, yeah. Go ahead.
We'll go off on a little tangent here real quick, just so you can stick with me. The SBA 504 loan is the second biggest SBA product that the Small Business Administration administers. And it's only for small and mid-sized businesses to purchase or refinance or construct or renovate their commercial property. So you have to be a business owner. And if you have a place of business, a facility where all your employees come together, rub elbows metaphorically, and that's where the magic happens. My contention has always been, instead of making your landlord wealthy, you should probably consider purchasing that property if you can. And so the 504 is probably the most effective, yet still kind of unknown product in that regard. It offers the best terms and conditions compared to a conventional bank loan. So that's what we focused on.
So I'm going to go more tangential here.
Okay, that's fine.
Let's go to this. So who's the ideal client for you on a 504 program? We'll get into the other programs coming up, but especially now. But for a 504 program, who is an ideal client for you?
Ideal client could be the physician who has leased their medical office for years and now finally has the opportunity to purchase what they're in or purchase a medical condo down the street or what have you. It could be the manufacturer who went into a large industrial park and basically was, again, at the beginning stages, they were leasing their office warehouse, and then eventually they have the opportunity to buy it or to build their own down the street or to buy their own down the street because they're expanding. Same thing with distributors. I finance a lot of restaurateurs, mostly franchise restaurants that include real estate. I do a lot of hospitality financing, a lot of hoteliers. Obviously, that fundamentally is going to include real estate in addition to the FF&E. It's remarkable the number of types of businesses that qualify, that ought to do this. Daycares is a big area, auto repair. Just on and on and on. Professional service providers.
So you said could be a law firm. Could be
law firms. I finance a lot of law firms, marketing agency, engineering firm, architect firm. That's kind of actually the most exciting aspect of my job is that I get to see so many different kinds of businesses, business models, different entrepreneurs that we're working with.
And so for our listeners, there's always some confusion. Am I a small business? Am I not? Is it 50 employees a number? Is $1 million in revenue a number? So what does it mean to be qualified for these programs, for example, the 504 specifically?
Yeah.
What's the definition of a small business?
Unfortunately, Rod, I'm not going to shed a ton of light on this because there's so much confusion over this and there's so many ways to look at this. I'll tell you the SBA standard, which is if you have less than 500 employees, technically speaking, you're considered a small business in America.
Got it.
By the SBA. So that means I do occasionally startup financing, for instance. And it's rare. And usually if I'm doing a startup deal, it's probably a franchised or a flagged situation.
Right.
But I'd say most of my companies, they're 20 to 150 employees. That's kind of my sweet spot, so to speak.
I'm just thinking, Chris, you said yourself, you were the CFO of the second largest brokerage firm in Orlando. I'm talking about my commercial real estate audience here for a second.
Yeah, it was the NAI affiliate here.
Yeah, I get it. Right. I know exactly who you're with. So, but if you're... We
actually birthed my first company, which just is operated similar to Fountainhead, but my old company, Mercantile Capital, actually we birthed it in the offices there in NAI.
There you go.
Robust.
I would think today, right now, especially today, and the time it's recording, folks, when we're recording this is mid-March. There's also a pandemic going around. There's a little panic, right? And it's everyone working from their homes, it turns out. JLL in New York just shut their offices a couple of times today. This is what's going on. But this is a time for us all to be resources to our clients versus put our heads in the sand. This is a great time. So I'm thinking these programs, and we're going to talk about the other programs in a second, we should be leveraging these programs to be a resource to our clients. We should be reaching out to the Chris Hurns of the world, and Chris Hurn specifically in this case, and say, hey, I need help with a certain client. Would you not agree with me there?
100% agree with you. There's some statistics for your viewers and your listeners. There's only 14% of all the banks, credit unions, and non-bank lenders in America who are eligible to have made an SBA loan that actually made an SBA loan in the last 12 months. So it's a very small group of us, less than 2,000 of us, actually. And there's obviously great variability between, if we're talking about competence and number of deals they've done. I mean, my company does, we're on pace to do a couple hundred of these loans this year easily. That was before the crisis, where now SBA is going to be tasked with trying to get a lot of this capital out the door and help save a lot of these businesses. So it's going to come through a couple of the SBA programs. I can talk more about that in a minute. But yeah, I think if a commercial real estate broker can go back and speak to their clients, they should try to consider themselves a tool for help. In these times, we all need to help each other out a little bit. And frankly, we got to make sure that the people that are most in need are working with people that actually know how to process these loans. And not every banker knows how to do that. So it's really critical that we get the people to the specialists so they can handle it, and we can hopefully save the economy, because that's really what we're looking at.
Chris, is it fair to say that you're doing deals outside of Florida?
Oh, yeah. Well, I've done deals outside of Florida always. And actually, if we go back to my story, I was going to tell you that when we were looking at that on a per capita basis, and so initially when we launched, my old company is called Mercantile Capital, we were going to just do these SBA 504 loans in Metro Orlando. Well, after about 6 months after launch, we were starting to do deals all throughout Florida. And then before you know it, we had a deal outside of Florida. And by, I don't even think it was month 14 after we started, we're suddenly doing deals all around the country. So at this point, yeah, we've now closed loans. I think I've now closed loans in 47 of the 50 states. And I've also closed a loan in Puerto Rico, which is a story for another time. But it's my one and only.
Okay, so here's what we're going to take a short break. And we come back, we're going to talk about the evolution of your existing firm, and specific programs are being offered right now by our government to really help out with the economy, and how you can give some insight about those programs as well. And then, Chris, we're going to have you finish off with what we call our Fast Five. We're going to ask you 5 key questions about your business you're going to have to answer in 5 minutes. So everyone else, stay tuned. Got a lot of information coming up that you can use as a resource for your clients, for yourselves potentially going forward. So hang on. We'll be right back with the Massimo Show.
Hey, this is Rod Santomassimo, and we always tell our coaching clients that knowing isn't doing. That's right. Don't kid yourself. In fact, in my new book, Don't Kid Yourself, Knowing Isn't Doing, Build the Business and Life You Desire, I lay out many of our Massimo methods that we share with our clients to help them transform their lives. My new book, Knowing Isn't Doing, is going through a soft launch that will happen in March of 2020, and then a big national launch in September 2020. For more information, check out knowingisn'tdoing.com.
Hey, this is Rod Santomassimo with the Massimo Show, and we're back with Chris Hurn talking about, SBA loans, sure, but other things in regards to what you can be doing right now, thinking about for your business or your client's business, to help them out in these somewhat chaotic times we're going through right now. Chris, welcome back to the Massimo Show. Well, let's get back with your current firm, Fountainhead Commercial. How did that come about? Why did this come about? What was your vision for the company? And how did you build to one of the fastest growing companies in America?
Well, to answer the second question, this is actually my second time I've been on the Inc. 500 list of fastest growing companies. My previous company also was on it too. So that's very gratifying. And the second time I've been on the best places to work in Orlando as well. So what happened was my old company, Mercantile, that I was talking about, we grew very fast, got on the Inc. 500 list. We're doing stuff all around the country. Right before the recession hit, we were actually going to convert ourselves into a national bank. We were going to call ourselves Emergent National Bank. And timing in this world is very interesting. We got our OCC approval, the Office of the Comptroller of the Currency, for a national bank. We got that approval 3 days before Lehman Brothers blew up. Back then, when you do a de novo bank, you've got to have a lot of folks already on staff. You're doing a lot of modeling. You're already buying very expensive banking software, et cetera, et cetera. You've already got your bank headquarters. You're already paying lease, even though you've got nothing coming in the door yet. So it's an expensive proposition. And unfortunately, the regulators were a bit consumed with the world melting down back then, that they weren't as fixated on. They were sort of saying they wanted new bank capital, but not really doing anything about it. And so about 6 months later, we withdrew our FDIC application, because you really don't want a bank charter without FDIC insurance. So we withdrew that in mid-February of 2009. So from there, we pivoted, and ultimately we ended up selling ourselves to our second largest warehouse line of credit lender. And that was a local bank here. And that worked out pretty well for a couple of years. And then they started, I've learned, Rod, that there's not, people throw around these terms M&A, mergers and acquisitions, but there's really no such thing as a merger. There's only acquisitions, and you're either the, you're either the acquirer or the acquiree. In this case, we were in the secondary position. So eventually they started meddling the business. They were trying to do some window dressing to sell themselves to a larger bank. They ultimately succeeded at that. Right before all that came to fruition, I, of course, swung into action, secured some financing, and actually made an offer to purchase back my baby, my company. And I don't know that they really negotiated in good faith with me. And so they kind of wasted a couple months of my time. So I exited, and exactly 6 months later, I launched Fountainhead. Fountainhead did everything that Mercantile did, even more so, and now substantially more so in terms of lines of business. Now we have 3 product lines. We're one of the 14 non-bank SBA lenders for the 7A program, which is going to carry a lot of the water for the recovery efforts. There's only 8 of us that are for-profit. We still do 504s. I'm considered the nation's expert at SBA 504s, and we also have a conventional product. So that's how we got to where we are, Rod, and we are almost twice the size of my old firm at this time. We just celebrated our 5th anniversary. I've got 35 employees. I've got 2 offices here in Orlando and in Denver. I've got a few remote people already. And then obviously, as of today, a number of my staff are working remote by choice. That's where we're at. It's pretty exciting times.
That's an incredible story. So let's jump into a couple of things here. Let's talk about what's going on this month, March 2020, and the federal government's recent announcement of new programs. Can you shed some light from a business owner standpoint and a resource standpoint? What is the government providing, and how can you assist in this endeavor?
Well, sure. I'll provide as much of a light as I can. The problem is, as you know, and depending on when someone listens to this or watches this, everything has kind of accelerated substantially in the last week or two. And so what a lot of us thought was this little flu strain from overseas has come here, the coronavirus, COVID-19. And I'm not as much concerned about the health consequences ultimately. I mean, I understand it's, if you're in the groups that are going to be hit the hardest, the elderly or the immunocompromised, I get it. And obviously I want those folks to stay as healthy as possible and stay away from people and hopefully stay clean. But for the rest of us, I think we have taken what was a health crisis and we've now created an economic pandemic. And that's really what we're dealing with now. And unfortunately, when part of the guidelines are for people to not be in touch with other people, and for, the schools have sent kids home, and a lot of employers, when they can, they've sent people home to work remotely. When all those things happen, of course, the business of America is business, and that has ground to a halt in many respects. And I expect it to continue. And now, this week we've got 4, 5, 6 states already as of this morning that have effectively quarantined people that are in the most at-risk categories, shut down restaurants, bars. Nobody's going and staying at a hotel these days. I mean, there is huge elements of our economy that are effectively shut down. And I expect it to snowball, unfortunately. I'm one of these folks. I was in a CNBC article yesterday saying, I will not be shocked if we're at martial law effectively, maybe not necessarily declared, but effectively at martial law by this weekend. And that's a problem. And so Why should people be concerned? Well, some of your commercial real estate brokers who represent landlords, for instance, those landlords may not get paid if we don't have a solution. How is a business supposed to pay their commercial lease obligations if they don't have any money coming in the door? How are they supposed to maintain payroll? How are they supposed to maintain other payables? That's what's about to come out of Washington any hour now. There's been a number of legislation that's been floated around to try. There's going to be multiple things, by the way, but in terms of the small to mid-sized business economy, there was a $50 billion statement made by President Trump last week in a national address to the nation. The SBA is diligently trying to figure out exactly what that's going to look like. What are the new rules and regs? These are unprecedented times, Rod. I mean, people are scrambling. Our phone lines, our emails have blown up because people think of us, I think rightly so, as a thought leader in this space. And so people are turning to us at Fountainhead. How can we help? And most of these loans are going to be working capital loans. I anticipate we're probably going to be taking a look at a business owner's monthly payables inclusive of their payroll and basically forecasting out 6 months, 9 months, 12 months. And that'll be the loan amount that we're making. Most of these funds I expect will flow through the SBA's 7A loan program, which is their flagship program. Those are loans that go up to $5 million. They're already going to waive the legislation that's been introduced by Chairman Rubio for the Senate Small Business Committee would waive borrower fees, would waive lender fees. What we don't know is the agency going to come up with some underwriting criteria for lenders like myself that will expedite the process, because this is, we're a little bit on the precipice here. We've got to expedite the normal underwriting. Normally, it might take a couple weeks to underwrite an SBA 7A loan and then another couple weeks to close it. I'm not sure. From what I'm hearing, some of these businesses are not going to be around by mid-April. So the crush, the surge, as I call it to my staff, is about to happen. We've seen some of it thus far, but I think it's going to get much, much more so. And we're going to try and do our damnedest to help as many people as we can. All my folks were in here at 6:30 yesterday morning. I was teaching non-credit people how to do credit in the 7A world because I'm going to need overflow capacity. I've kind of floated the idea out to various circles of folks that I know to do what I'm calling a distributed underwriting model, which means I may bring some people in, teach them how to do this by webinar, of course, because I'm not expecting people to leave their homes. But I've got friends that are attorneys. I've got friends that are financial planners. I've got friends that own a manufacturing company, what have you. They're not doing much work these days, Rod. They're working from home. Fortunately, they have internet access and computers, and they're smart people. And I can probably spend half a day with them teaching them what we need them to help us with, and they can start helping us process these loans. Obviously, everything's going to flow through us, and we're going to have final sign-off, and we're going to double and triple check the work they do. But it's crisis management. It's a situation like this where we might be able to help more people and actually get more money on the street and save some business. That's really what we're facing.
I think that's phenomenal. And no doubt, people need to understand that there are resources out there. Right. No doubt that their business is being challenged. And again, from our commercial real estate perspective, if you're the resource, you got to be an advisor and suggest these programs. It's not about fee right now, folks. It's about being a resource for your clients. So Chris, I've now seen 2 significant, now we're at 3 significant pivots in your life. Number 1, 9/11, you had an issue and then you couldn't travel. God, luck, who knows, fortune, but you decided, hey, I don't be employed anymore. I'm going to craft my own destiny. Fantastic. 2008, you built your bank. You're ready to go. Lehman Brothers collapses. The economy collapses. And you recognize, no, let's shift and do something else. Well, now it's 2020. We have the pandemic. And I love how you said it, more of an economic pandemic as well as the health side. So is the next pivot for you? And based on what you're telling me, you're going to start training all these folks with your webinar. Do you see an expansion on your online reach, or have you yet thought about what's the next pivot? Or we know a year from now what the next pivot was for you?
Well, I think the next pivot is that we're going to go through, we'll probably 10x the business if things roll out as I expect they will. We were already to grow pretty aggressively because our 7A business is only 13 months old. We only bought one of these licenses back last February. And so that was already the rocket fuel in our business as it was. We were probably going to 3 or 4x our business this year. If we get the kind of direction that I'm expecting we're going to get out of the agency and continue to see the demand that I expect will continue for some time now, at least through the remainder of this year, then we'll probably 10, 11, 12x the business this year alone. So it's exciting. I used to say I didn't want more than 50 employees. Well, I'm approaching quickly 50 employees, and maybe 50 employees is not the issue. It's just managing a lot more than that, remote folks. But again, we've kind of been treating this like we're in wartime a little bit over the last 4 or 5 days, and regular meetings. And I think people are worried because they're afraid this crease in my forehead is going to get permanent or something, because I'm taking everything so seriously and furrowing my brow all the time. But I mean, that's the situation we're in. And none of us are medically inclined over here at Fountainhead. We can't necessarily save a life, but we can save a business. And I hope this message resonates with people. And if they're interested in helping us with this distributed underwriting idea that I've got, it's probably not something that our competitor banks or credit unions would consider. Too much risk, too much frustration. They're not agile enough to manage that, but that's not us. And I think in crisis times, special circumstances, special companies rise to the occasion, and we hope to do that. And we've certainly done a lot already, and we're getting ready for what's coming at us.
Oh, that is absolutely awesome. Okay, Chris, I cannot let you go until we do the 5 at 5. Got it?
Okay. Yep.
Okay, so here's what I'm going to do. I'm going to ask you 5 questions in 5 minutes or less. You're going to have to answer them. And it's all about you and your business, because folks out there now, they should be thoroughly impressed with what you've created, right? But they're going to ask, how does he do this? How does he do that? So I'm going to ask the questions for our audience. And so you ready?
Yeah, go for it.
Here we go. 5 factors, success factors in 5 minutes. Chris, prospecting. How do you and or your company ask for business? Not tweet or not Facebook, but actually prospect and ask for business.
Well, we try to be different than most of our competitors. We try to stand out. I think there's far too many industries where everybody is like lemmings to the cliff. They do what everybody else does. When I see that in an industry, I try to do something that's 180 degrees opposite of that. For instance, in my industry, it's very common to have commercial loan officers or BDOs, business development officers. We don't have any of those. We never have. We take those dollars that we would have otherwise put in those fixed costs, high salaried folks, and we put it into media relations. Okay, so we can be thought of as a thought leader, so we can scale the reputational chain. We put it into sophisticated marketing efforts. That's what I think is a good example of how we sort of defy industry norms. So how we ask for business, I think we demonstrate our competence very quickly, and we really do move very quickly compared to our competition in deciding loans that we want to approve or not. And then we just kind of smother them. We just kind of bear hug them until they submit or tell us to leave or go off.
It sounds like you have more incoming business than actually outgoing calls and prospecting.
Oh, for sure. Yes, for sure.
So what's generating this incoming, the marketing side, marketing question, what's generating this inflow of inquiries? What do you do to market your programs and your business?
Well, we take an approach that I like to call being omnipresent. So it means that we are all over the place. For instance, I did 6 media calls yesterday, interviews. I've got 3 more today. When I'm on CNBC and they send out their article or they do their video, then we repurpose that. We distribute it across all of our channels. We don't let it just sit there. We have quite a following, both myself personally as well as a business. We have quite a following across a lot of the social media channels. When we post things, we try to think about what's in it for our audience, what's in it for them. Unlike a lot of people in my industry who just, they think if they throw up a tombstone, that's what bankers call it, that's exciting. Tombstone, for people that aren't in banking or finance or even commercial real estate, they hear tombstone and they think death, which, that's not quite the connotation that you're trying to put out there. And plus, there's usually nothing in it about what's in it for them.
Absolutely true. Amen. We preach that all the time. Okay. Yep. Software, as far as communicating with your team, running your day, is there any software you like to rely on for that?
No, not necessarily. We are building a pretty sophisticated custom software that's going to blow everything out of the water in our industry. And we will be in the interesting position of deciding probably late this year, early next year, if we actually want to spin it out or we just want to keep it as a competitive advantage. But we've spent a lot of time and energy and a lot of resources building this out. It helps us to communicate better with our clients, better with our intermediaries, whether they're a commercial real estate broker or a loan broker or otherwise. It allows us to not fall into spreadsheet hell or just, have those 3 a.m. wake ups because you can't remember if you called so-and-so that you're supposed to call on this date at this time. So it's a combination CRM. It also maps all the data into all of our documentation, all of our forms, our underwriting forms, our closing forms, etc. We can slice and dice all the data. We're reading when someone submits tax returns to us, we actually read it, we automate it so that it's almost, I don't want to call it AI, but it's kind of quasi AI, all to try and expedite the process.
So last, we're going to ask you about your team, but you already shared what your team is, 35 employees, 2 offices, and some remote workers. I got that. So last but not least, before March, Chris, before March happened, what was a day in the life of Chris Hurn? What time do you get up? What'd you do? What time do you go to bed?
I get up about 6 o'clock in the morning. I take my son to school, drop him off because he's about 5 minutes from my office. So I get to the office about 7 o'clock every morning. And I've got a couple hours of before all hell breaks loose. And then I got people lined up outside my door almost regularly throughout the day. These are employees lined outside my door. I usually have things, I schedule calls. I'm very particular about that. Again, to try and economize my time. So it's not uncommon for me to have 10 to 12 calls scheduled throughout the day and maybe another 2 or 3 meetings throughout the day. That usually keeps me pretty busy. I get over 400 emails a day. I probably respond to 100, 150 of them a day. And I'm going. I have my administrative person has to make sure I eat lunch every day because if I'm in the flow, I oftentimes forget about that. And then he hears it from my wife, who, gives him grief. I usually leave the office about 6:30, and fortunately, I live about 10 minutes from our office. We own our own building, of course. We practice what we preach. Yeah. So I'm home in about 10 minutes. That's usually right after rush hour, so that works out pretty well. Spend time with my kids. They're both teenagers for a few minutes. That's about all they'll give me. And then the rest of the night is with my wife, hanging out, talking. She's usually got a lot to say. I usually have hardly anything to say because I've said it all during the day and I'm exhausted and don't want to talk anymore. And I might watch, half hour, 45 minutes of TV, and then I go to bed, usually by 10:30, read a book for a few minutes and pass out.
There you go. 5 success factors in 5 minutes with Chris Hurn.
Not very glorious.
No, it is. You're so busy. You're building another company, best place to work, fastest growing company. And I know after this call, you got to jump on a call with the Wall Street Journal. I do. So I know we can't thank you enough for your time. We're going to get this out to everyone ASAP because they need to hear your story. They need to know you exist. And that you're a valuable resource for their clients. So, Chris, I cannot thank you enough for your time.
Thanks for having me, Rod. I appreciate it.
Okay, Chris, best of luck. And thank you for what you're doing for everyone else.
Thank you. Stay healthy.
Okay, everyone. So here's what happened. Chris shared with you a lot of things going on, a lot of the knowledge again. But as we always say, knowledge is cheap. It's the doing, and you got to do it. So what should you do right now? First of all, check out Chris, his company. Check out the programs he's talking about, and then look at your list of people you can help. You can be a resource too, or if you own an asset or you have a need of funding, reach out to Chris and get it done. So knowing isn't doing, it's the doing that matters. Until next time.